Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, November 17th. And today in the market we got what we expected. We've been talking about it for the past couple of days, saying how the market hasn't, we were expecting a breakout, and the market wasn't breaking out. It was having some trouble, and then it continued to make lower highs. Even though it was making higher lows, the strength just wasn't there and the volume wasn't there. So I want to say it was Tuesday, I was getting cautious, and I was doing some selling, basically taking risk off. And as yesterday came, yesterday afternoon, I thought that was basically the straw that broke the market, and basically our next move was to the downside. And we're seeing more of that. We're seeing a little bit of follow through today. The volume was higher relative to yesterday, and we're seeing a breakdown from this consolidation pattern. So the next leg in the market is down. Now, fortunately, there's a support level about 1% lower from current levels. I mean, maybe 1 to 2%. So it's not like there's a lot of downside risk. There could be. I mean, I guess it could slice right through this and go back down to 1150 to 1100. But for now, we are. Let's put it like this. We confirm that this trend this pattern is broken to the downside, and now we're looking for more downside, obviously. So let's break this down a little more and look into the intraday to see what's going on. So as we broke down today, we stopped at an interesting level, and it was interesting. Well, first, let's talk about what went on today. First, the market opened, and we rallied. After getting some news, we rallied up to the point of control zone and sold off. So this is what I'm talking about when I'm saying that the market will test, generally speaking, the point of control of that range one last time before it makes a flush lower or a rally higher. And in this case, we got a test of this point of control zone and a nice sell-off afterwards. Whether that was the only test, it's very hard to say. I want to say I doubt it. We probably will get another test of that level, maybe even tomorrow. You never know. But what we're seeing here is the market's breaking down, and even the last try the bulls had, they failed, and you can see the market broke down. Let me get rid of the lines. We had, I guess you could call this a bear flag. Market sold off yesterday, had a little bit of consolidation this morning, and it sold off again. And now we're getting some more balancing. This time, we're at support from it was a swing low back in early November. And we're seeing, you can see the volume at the end of the day. Of course, it was the end of the day, so there always is a volume spike. But you can see the last few volume spikes have been meaningful. This volume spike was a low. This volume spike was a breakdown, and now this volume spike is against support. So it's going to be interesting to see if the bulls can, or I guess the buyers, because they may be short covers, can bring this market back up to that point of control zone around 1235 on the S&P. Looking at today's intraday action, as I bring up the intraday chart of the S&P futures contract, the point of control finished at the bottom of the range, and when that happens, we're generally bullish about the next coming days or time period, whatever it may be. So I want to say the next move in this market is up, back to test the balance area that we saw at the beginning of the day. So we'll call it 1225 to 1235. So a 10-point range, which is pretty broad, but from a buyer's standpoint, you have a pretty good, basically, support level. And I say that because we have today's intraday point of control, and also I wanted to bring up the best chart to show you what's going on and why I have support on the other chart. And you can see this volume sticking out very nice. We should have a decent bounce, basically a throwback of the breakdown that we've seen, and we're looking for a test of that point of control, really 1227 to 1237, and we'll see what happens from there. Now, if the market just keeps going down, then that's telling you something, but like I said earlier in the video, we are coming up against pretty good support. So let's show you what we're talking about for you to get an idea. Okay, what I was talking about is this 1180 to 1200 level. That's the point of control for this range, so it's an important range. So what we're ultimately seeing is if price gets into this level, which I'm assuming it will, but there are no guarantees, how will the buyers react? And I think regardless of the market action, there should be a tradable bottom in this zone. So when the market gets into this level, we wait for the buyers, and when the buyers are there at this support zone, we buy with them, and we place a stop right under basically that support zone or those recent lows, whichever you prefer. And that way you're managing your risk. And even if the market, even if your expectations are only a 2 or 3% move, at least you're probably going to make money on that trade, or at least break even, worst case scenario, because your goal at the end of the day is to get your position to break even. So as far as the market short term, it looks like we have a little bounce, but there's a lot of people who bought in this area that just want their money back. So watch out for the selling pressure and basically be prepared for more downside. The euro, it didn't do much today, which is surprising relative to the rest of the market, or I should say to the equities market, but we did gap higher relative to yesterday and trade lower, closed lower than yesterday's close. So technically this is a bullish or a bearish engulfing pattern, where, well, I guess not technically, but what I'm trying to get is yesterday's close, okay, let me start that over. As I zoom in here, against the value area for the year on the euro, you can see yesterday, well, let's go back to Tuesday. Tuesday, the market closed down, or the euro traded down below the value area and had a move back higher, closed right above it. The next day, it gapped lower. Yesterday, that is, it gapped lower, traded up, and tested basically the opening print or the opening price of the euro on Tuesday, failed and closed lower. And today, we gapped higher to the value area and basically traded lower and closed below yesterday's close. So the trend is definitely to the downside, and sure, there's probably an opportunity for a bounce soon, but at the same time, is that something you really want to be a part of? This pattern looks like it's just getting started on a bigger term time frame. We had our huge topping pattern, our breakdown, our test of the breakdown, and now basically more downside. We're looking for the low 130s on the euro. Likewise with the dollar, we're just seeing the exact opposite, our bottoming pattern, which we talked about last night. A breakout test of the breakout level, I guess you could say, of the point of control, and a successful move higher. We're still seeing higher highs and higher lows both intraday and on a bigger scale. So this is something that you want to be long dollars. You can see the volume. You know, it's not huge relative to September and October, but it's pretty good volume, and it's something. It's not a bad thing to be in dollars. Dollar is a position. Now, as we move into the metals, we have silver, and silver took it on the chin today. I think last night I was saying that this looks like it could roll over with your point of control as the resistance, as your reference, and sure enough, down 6.64%. It looks like silver has another dollar or so to the downside, but it could be an opportunity to get involved in SLV around 29, around 30. So be opportunistic, and be prepared to buy this. But at the same time, it almost looks like the euro. We had our rally, consolidation, a lot more sloppy, and basically a breakdown, a test of the point of control, and now we're moving lower. So this isn't something I'd want to be a part of right now, but in terms of a short-term bounce, I'd much rather be a buyer of silver than a buyer of euro. Now moving on to gold. Gold is a little bit, we talked about last night how gold's been in an uptrend, so the volume profile chart looks different. Our value area is the two blue lines, point of control for the year, so the purple line. And then we have some other miscellaneous support and resistance levels. This blue line up here is the point of control for this relative range. So we are failing against an important point of control level, but it's not the point of control for the year, so it's not as relevant. And what I think for gold is we're getting to an opportunity where we can be buyers, just like in silver, except for with actual expectations of more upside on gold. I think any Europe or macro news that's just bad news, basically, is an opportunity to buy gold, especially if on that day gold's down. So you want to be a buyer around a reference point like the value area high, for this example. Market breaks out, we're looking for a test of the value area and a move higher. Now, of course, gold can move back into the value area and trade back to the 150 level, but we have to get through the 160 level first before we can think about 150. So as gold moves lower, I think it becomes more of an opportunity, even more so than silver, especially more so than euro. Let's look at an intraday chart of gold to get a better idea of where we stand. Okay, as I bring it back over to the volume profile chart, hold on. Okay. We are at gold's point of control for the last month, and it's hard to tell if that's going to matter, but I think it's an opportunity to start scaling into some gold. And sure, there may be more downside, but this is a good low risk opportunity, because if gold keeps moving lower, you can have a stop around 166 on the GLD and basically right below today's lows, and look for a bounce. And that bounce may only go up $2.50 to around 170, but it gives you a reference point. This point of control for the month, it gives you a reference point on where the buyers are, or I should say where the most activity is going on in gold and in gold for the last month, and if you can make the appropriate decision if you want to get involved. Let me bring up a different intraday chart to give you an idea. So this may be a better visual. You can see that gold is definitely, it had its rally sideways, and now you can see it's starting to roll over, though this could be a situation where gold is just in a bigger trading range. And at first, I believe it was last week, we were talking about how gold was probably in the 169 to 175 or 174 trading range. That ended up being pretty accurate, and the point of control for that specific range formed at the top end of the range, and you can see it rolled over from there. So we're seeing a volume profile play out every single time, and its accuracy, you just have to wait for the trade to develop. And that is, I promise you, that is the hardest part about trading if you're struggling, is being patient enough to let the trade basically come to fruition. So right now we're looking for some buying on the GLD, and if we get that, we can have our stop right below today's low, assuming it doesn't penetrate. If it does and still bounces, let's say it makes tomorrow, it opens, trades lower, and then has a sharp V rally intraday, you can still get involved, and your target is simply the 170 level where it previously broke down. So it's a very short-term trade, but it could be a profitable one. And if that's your type of trade, then this is a trading idea. So I hope this GLD trade is something that works out. I bought a little bit into the close, so I'm expecting a little bit of a bounce, and if we don't get it, that's fine too. Part of trading is losing money, but the important part about losing money is losing small and basically allowing those winners to outpace those smalls in dollar amount. So let's move on to a few more names. Okay, DDI Corp. I've talked about this for probably the last week or two, saying how we're basically coiling and we're looking for a move higher, and I think we are closer to that than we were last week. We're getting close to a breakout one way or the other, and I want to continue to think that this stock is going to move to the upside. However, it's very important that we cover the levels of the important point of control for the year, which is at that $9 level, right where we are trading at. And one thing to observe is you can see all of the closes, especially for the last couple weeks, none have been able to close, all but one yesterday, above the point of control for the year. So that's an important development, and I think it's worth watching and worth noting. But if this thing does break out to the upside, you do have a target of $10.50, which is, it's not the value area high for the year. The value area high for the year is $11, but $10.50 is a high volume area, and you can see it was an important level back in the early part of the year. So this could be a decent opportunity for an upside breakout, but of course rising tides lifts all boats, and if the market tanks, this could tank with it. So as far as if you want to be involved right now, you just simply keep a stop right under the lows that have been made throughout the last couple of weeks. I'm going to cover two more names, Apple and oil. Oil first, and we don't have to go too far in detail. We can see oil had its monster move, and it overshot this point of control level not for the year, but for basically this trading range. The point of control level was the $98 to $100 range. It overshot and had a big sell-off today, pretty good volume, we almost had a bullish or a bearish engulfing pattern. Not quite. The open was just at yesterday's close, it looks like. But yes, today's close was below yesterday's open. So we're seeing a little bit of retracement. I guess, I mean, really, it could stay in this $97 to $100 range. But I wouldn't be surprised if oil came back to test this $94 to $92 range where we had some prior consolidation. It just depends on what the market's going to do. There's some overseas risk with oil right now, which is which helps spur this rally in oil. So it just depends. But I think we definitely have a short-term top on oil, and I think it's safe to say that if you want to get involved, for example, with USO and do a bear call spread and collect some income, you can do that. I wouldn't go too far out in time, maybe a week. I don't know if I would go out to December, but it depends what the premiums were and what my risk reward was. Another thing you could do is buy a bull put or buy a put spread and basically look for some downside in oil via maybe, I wouldn't do a very wide spread. It would just be to capitalize on a retracement in oil. So let's move, that's all for oil, but let's move on to Apple, the last name we're going to cover. Okay, Apple, and this looks like a confusing chart, but let me break it down for you, and let's stick with the thicker blue lines. That's our value area range for the year, and our thick purple line is the point of control for the year. The dotted blue lines is the value area for this range, and likewise the thin purple line is the point of control for this range. So you can see we're failing. If you're focused, I'll just bring this line down. If you focus on what's going on, we're having a topping pattern in Apple just like the euro, but we are also in a defined uptrend in Apple. So Apple still looks good. We're just trading back into value for Apple. I'm going to say that this 375 to 370 level in Apple, really 370, it should be a tradable bounce, maybe not. Ultimately, the 360 to 350 level, that's where you want to get involved in Apple as a buyer, in my opinion. 330 would be even greater, but I don't know what the chances of that would happen unless if there's really a market downdraft. So really Apple's, it's definitely not a hold if you're long. It's not a sell because you should have sold back up at the 400 level like we were talking about. And it's not quite at a buy yet either. I think we have a little more downside. Though remember, the S&P looks like it's probably going to give us a bounce. So Apple may bounce with the rest of the market if we do get a bounce. But if we don't, look for the 370 level to start getting involved. So anyways, guys, I hope this video helps. It's pretty lengthy. If you're liking what you're hearing, go ahead and register at volumeprofiletrader.com. It's free, and you'll have, I usually do one blog, usually in the morning time, to give you an update of the market, what's going on, what's my opinion, because between when I make the video and when you watch it to the next day, sometimes things change, and it may change the thesis of a position. So I just want to help you guys out, help learn more about the markets and to make profitable trades more often. So anyways, good night, and I'll see you tomorrow.